Hello and welcome to my channel, The Last Investor. My name is Dan. Today I want to talk to you about Rio Tinto's half-year earnings result for 2019. I'm going to touch on what the results tell us about their financial performance so far in 2019. I'd also want to touch on what were the things that impressed me about those results, if any. And if there are any surprises as well, I'll touch on that for shareholders, and also whether I think the stock is still at a value. So without any further ado, let's get into it. But before I do so, I just wanted to say the reason why I'm doing this particular review is because Rio Tinto is one of the shares that I'm actually invested in at the moment. A little bit of a background about me: I am a dividend growth investor. I use this app which you're currently seeing on the screen, which is called the Free Trade app, and I use that to do all of my dealings there. I've only just started value investing or dividend investing, and as you can see, I've got very little money in my account, 875. I'm trying to build that up. I aim to invest about £200 a week, and I aim to basically do videos on a weekly basis giving you an update on how I make my investment decision. I effectively use 4 key rules in making a decision about what I should invest in, and that's basically companies that have a good balance sheet, companies that demonstrate growth both in the past and forward looking, and companies that have a good competitive edge, and of course, most importantly, companies that are at a value and not overvalued. So there we are. Without any further ado, I'm just going to give you my take on the financial performance for 2019 first half. But please remember to subscribe to my channel and check out my very first video, and that will tell you a little bit more about me. So right now, the results for the first half 2019 for Rio basically has been a good result, and just some of the key things and takeaways that I take from it is basically, firstly, their earnings before interest, tax, depreciation and amortization, EBITDA, is $10.3 billion, and that's quite good. It's roughly about 47% of revenue, so 47% income profit margin. The other thing which is also good to note is that it has a return on capital employed of 23%. Now, the way I like to look at return on capital employed is basically you take all of the company's capital, which is all of its equity, and you take all of the debts that it has, and obviously the whole purpose of generating all of that equity and generating all of that debt is to be able to run its business, to fund its business activity. So those two key elements, the debt and the equity, when it puts it into use, how much earnings does it generate as a result of that? And in this case, it generated 23%. And if you look at it from the perspective of, say, you purchase a house and your house is worth £100,000, and it's in fact generating 23% each year, or for this year it generates 23% rental income, you'll be quite happy with that. I don't think many houses actually generate that sort of return. I could be wrong, but I don't think I've seen any generate that amount of income on the actual capital that you employed. So for me, that's a really good, impressive result to generate 23% ROCE. Then the other thing to also look at is the balance sheet. Now, balance sheet is a very big thing for me, and the reason why it is because I try and avoid investing in businesses that have a lot of debt, and because it's very easy for companies to fall down if they have a huge amount of debt. So there are 3 particular ratios that I use to monitor or measure how well a company's balance sheet is. First one is debt to equity, and although none of these results were actually available, I had to basically work this out myself using the results that came out today. And it's still got a debt to equity of about 0.35, which is really good. So if you think of it like for every $1 of equity, it has a debt of 35 cents. So that's really, really good. I mean, I tend to avoid companies that have more than 40 more than 0. More than 0.40. So it's well under that, which is good for me. Then in terms of the total liability to equity, again, that's more than just debt. So when you look at the balance sheet, you've got the debts, long-term, short-term debts, and you have other liabilities such as accounts payable and things like that make up total liability, which would normally be usually bigger than debt. So the total liability to debt was 0.96, which again means for every $1 of equity, it has a total liability of 96 cents. Again, very, very good. I tend to stick to about 1-to-1, as in total liability of 1 to equity of 1, and that works fine for me, but this is under that again. Then finally, this is the current ratio, and it has a current ratio of 1.55. And again, that's really good. Current ratio basically is the current assets over the current liabilities. And here it has current liability. If the current liability is 1, then its current ratio seems to be 155. So its current assets seems to be 155. So current assets covers all of its current liabilities if it had to pay that off within the year. So those are the financial figures, and they all look very impressive. But the one thing that really actually impressed me the most is not those figures that I've just quoted to you, but it's this. Rio Tinto, in fact, has announced that it's closed down its coal mining business, and basically it's generating zero coal in the whole of 2000. It's generated zero coal in the whole of 2019, and that's absolutely brilliant news for me. And I'll tell you why it's brilliant for me, because I'm a true believer in taking steps to reduce the carbon footprint that we're having on the planet. And it may not seem like a big issue at the moment, but it really is. And as time goes by, there's going to be significantly growing pressure on businesses to cut down on their carbon footprint. And at the very forefront of these carbon footprint, these emission generators, it's basically coal. And not just coal, but you also have oil and gas. And organizations who are still heavily invested in that industry, I'm staying well away from them. So it really comes as good news to me that Rio Tinto has taken huge steps here to completely close down all of its coal mining operations and sell off all of those assets. In my view, personally, I think they're liabilities. So I'm glad it's gotten rid of them, and it's now heading towards a really, really good future, investing more in renewables, which also is a very good thing. It's also announced as part of that commitment towards climate change that it has, in fact, now has a 65% reduction in its carbon footprint as an organisation year over year. So that's a 65% reduction from last year, and that's excellent news, and hopefully may that continue. So I really have a very good outlook for the future for this company. It's heading in the right directions. It's gotten rid of its potential liabilities that could affect its productivity in the future, and it's now heading down the right direction. So that's great news. But what really is going to be quite a great news for shareholders, that's people who currently own shares in Rio Tinto, is its announcement today that it's going to be paying out dividends of $2.5 billion to all of its shareholders. And on top of that, it's going to be paying special dividends of $1.2 billion in addition. So in total, it's announced that we're paying out dividends of $3.7 billion in August. And that's great. I I don't think they've actually given details of what the rate would be, or the yield. Obviously, because that could change between now and when the dividend is actually paid. Obviously, share prices could go up and down, and the shares outstanding could change as well, go up and down. So obviously they couldn't really possibly announce that. But I've done my own back of a napkin calculation, and from my calculation, I make it to be $2.30 per share in dividends. So that will be the dividend rate of $2.30. And given that the shares are currently standing at $55.03 today, that will give a yield of about 4.2%. So again, that's pretty respectable, and that's quite a good bumper dividend. So as a result of that, I'm personally today, as you can see, I purchased three additional shares today, and as well I was quite lucky because the share price had actually fallen down. When I purchased my initial shares last week or a week before that, it was trading at, as you can see, £48.40, but that's now gone down to 45 and 43, so hence why I had to buy a few more shares. So I'm really happy about that. Do I think that this stock is still a good stock, or do I think it's not a good stock? Yes, there are a couple of things in terms of bad announcements that came out today as well, which of course everyone should take into consideration. One of them was that the net earnings was actually 6% down from last year. So last year they had the net earnings from last year was 4.4 billion at this time, but this year the net earnings was 4.1 billion dollars, which of course is 6% fall, but it's still an impressive earnings report. It's a positive number, and of course it's generating a lot of income, as can be seen from that. Then there is the other issue which continues to plague and haunt this company, and that's its Oyu Tolgoi copper and gold mine. Now, Rio Tinto invested into this gold mine in Asia, in Mongolia, and this gold mine, this copper and gold mine is meant to have huge reserves of copper. In fact, it's supposed to generate one of the largest. It's supposed to potentially generate one of the largest copper reserves in the world. So this was meant to have been a really, really great find for them and a great coup for them when they signed a contract all the way back, I think, in 2010 or thereabouts. But unfortunately, since that time, the company have been plagued with mishaps after mishaps after mishaps in relation to this particular mine, and unfortunately it's continuing, and it really has affected their reputation, and only in terms of profitability, but the irony is that the company continues to perform very, very well irrespective of this. But unfortunately this mine effectively is a swallowing pit. It just keeps on swallowing and consuming large sums of Rio Tinto's money. They own 67% of the mine, and I think the other 34 or so percent is owned by the Mongolian government. And every now and again, there's something in the news about the Mongolian government threatening to basically change its terms and change the terms of their contract, which might make it a bit more worse for Rio Tinto. And all this is just an ongoing soap opera, really. So, but there is going to be some light at the end of the tunnel, I think, in my personal opinion. I think once they get over all of these bumps and difficulties and obstacles in their way, once they get over all of this, I think, and they start to make full production and full use of the Oyu Tolgoi copper and gold mine, then I think we could see a lot of great things come from this company. And irrespective of that, they're continuing to develop other areas of mining, and they found other four potentials which they talked about in their report, and that's all good signs. I think this is a very healthy company, and I think it's trading at an undervalue at the moment. So if you were thinking of investing in this company, as I said, I'm not recommending that anyone invest in it, but there is a date that you should bear in mind, and that date is the 8th of August, which is the ex-dividend date. For anyone who doesn't know what ex-dividend date means, it means that in order for you to benefit from the dividends that have been announced, you would have had to have purchased a share, or you should have to purchase your stock or your shares by no later than the day before the ex-dividend date. So in this case, the ex-dividend date is the 8th. You would have to have purchased your share by close of business on the 7th of August. So that's all the news I have for you guys. I hope you've enjoyed it, and if you've lasted this long, then thank you very much, and I'll be really grateful if you could subscribe so that you can get some more videos as I go through this journey with you. And of course, I'd like to get my subscription up, and so I can share more fantastic news and views with you. Take care. Peace.